what the heck is an S Corp? Because you see that term get thrown around all the time, you try to Google it, and it all doesn't make sense. It's actually kind of complicated, you guys, but I'm going to try to make it, as always, easy for all of us to understand. So if you guys don't know me, my name is Anna Klein, and I am a CPA that is here to help you play the IRS game just like the wealthy do it. Let's get straight into the video about S Corps. I'm going to just throw out some facts at you, but then I'm going to give you an example because I do think that examples just are better for me to understand, and maybe they'll be better for you to understand. I think that me just throwing out facts, you might be like, what the heck is this? So for me, having an example is the best way for me to understand. Now, before you watch this video, I encourage you to go watch the LLC video that I made. I'm gonna link it below, but in order for you to understand an S Corp, you do need to understand what an LLC is and why do we need it and so on and so forth. It's in the video, I'll link it below. So what is an S Corp? An S Corp is when you are taxed as an S Corp. It is an election to be taxed as an S Corp. Now, there are two ways to create an S Corp. One way is to create an LLC and eventually apply to be an S Corp. The other way is to, when you are creating an LLC, you automatically apply to be an S Corp. But if you see that, you need an LLC to be taxed as an S Corp. How do you be taxed as an S Corp? Well, you kind of have to ask the IRS, like, hey, can I be taxed as an S Corp by filling out this form? It's the form 2553. There's a lot of information in this form. You should have a CPA or an attorney help you with that form, but I just wanted to show you what it looks like. It gets mailed, I don't know where it goes, and someone opens it and they eventually give you an acceptance and they're like, congratulations, you're an S Corp, you are on your way to save taxes. That's what you need, an S Corp. Now, when do you need an S Corp? Here's a rule of thumb that I tell people all the time. If you have a business that is netting, meaning after all expenses, you are still left with about between $40,000 to $50,000 net income, that is when an S Corp is going to make sense. And here's the reason why. When you do not have an S Corp and you have a single member LLC, you will be taxed just on your 1040. And you will have the Schedule C. So the 1040 and the Schedule C. When you have an S Corp, you have two tax returns now. You have the 1040 and you have an 1120S that is linked right here. And you have to file an S Corp return. Now, an S Corp return, just like a partnership return, is going to be a lot more complicated than your 1040. So that is why you want to hire someone. Now, an S Corp return is going to cost about, I hate to throw out numbers because everybody does them differently, but industry standards for an S Corp preparation is it starts about $2,500. So you definitely want to make sure that it makes sense to be an S Corp, because we need to make sure that the benefit outweighs the cost. In other words, it needs to just make sense for you to do it and not just want to throw money at it, right? So the number one change is that you will have to tax return. The other change is that now you are required to pay yourself a salary. The IRS likes to call it reasonable compensation. Nobody knows what reasonable compensation is. Well, we do. It's a little bit more complicated than that, but essentially you have to run payroll. If you are a 2% owner and you are active, you are required to run a reasonable compensation salary for you. So now you have to have a payroll company. Now there's a lot of payroll companies like Gusto, QuickBooks. They're very cost effective, but again, you're adding an additional cost that you did not have when you were just a single member LLC. But what is the benefit? Because I gave you now how to do it, what the drawbacks are. The benefit is that you most likely, because like you see me talk about it in all my other videos, it doesn't mean that this is always going to save you money, because it depends on your financial situation. So most likely it is going to save you on self-employment taxes. How? All right, here's where we come with the example. Let's say I start a Etsy business. I start selling plans. Let's say that my Etsy business, after all my expenses, I net $50,000. And I don't hire an accountant who's going to help me tax plan. I'm just throwing money around, living my best life. That $50,000 is most likely going to be taxed an additional 15.3% of self-employment taxes. 15.3% on top of whatever other income you have over here. So my people in Cali, I always like to call y'all out because you're easy target to talk about when it comes to taxes. But if you live in California, you're going to pay federal taxes to whatever your W-2 is. Now you have your plant business and that generated income. That income specifically is subject to self-employment tax. Like I said, 15.3%. And then you have California taxes. So you could be paying, 35%. You don't want to do that. So what did I do? I went and hired a CPA who was going to help me do some proper tax planning. And then when I went to that person in the fourth quarter of the year, they advised me that in order for me to save taxes, I needed to get taxed as an S Corp. I already had my LLC. So what did my tax accountant do? I don't really know. She did what she needed to do and she made me an S Corp. I got my letter and it was cool. The letter that you will get will look like this. Now, the business that I'm doing of selling plants netted me $50,000, but guess what? That $50,000 net is no longer, honey, subject to self-employment taxes. Boom. Now, okay, it's not as great as it sounds because you still have to run my payroll. So now I run payroll on my plant business, and that payroll is subject to self-employment taxes. However, it's not the entire thing. I'm gonna give myself a reasonable compensation and only that amount is going to be taxed as self-employment taxes. Again, a very complicated thing with the IRS, just like they like to do everything, but I just want you to understand. Not having an S Corp can cost you 15.3% in self-employment taxes. Having an S Corp may save you 15.3% in taxes. However, it is a little bit more complicated to do your taxes. You have to have better record keeping, but the amount of tax savings are worth having a conversation with a good tax planner. I hope that helped you understand the difference between not having an S Corp and having an S Corp. But again, all these videos that I make are not for you to have a great understanding of the IRS code. It's really just for you to have some basic knowledge when you have a business so that you can bring this to your CPA. And as long as you're knowledgeable, they will be able to guide you better with your own numbers. Because remember, everyone's numbers are completely different. But at the end of the day, these videos too are for you so you can learn how to play the IRS game just like the wealthy do it. That's it.